can get started. Just wanted to welcome everybody to this webinar series. This one is focused on the FCC Form 499, kind of revenue reporting, and the de minimis exemption. We do plan to have a series of regular webinars on various telecommunications regulatory topics coming up. So also, if anybody has any topics that they're interested in, want to learn more about, please do reach out to us, because we're really happy to provide additional information on any of the topics affecting regulated communications providers, both in the US and elsewhere. And with that, oh, go ahead.
As part of this, we're going to be sending out a questionnaire or an overview at the end, and there'll be some suggested topics for future webinars on there, but there'll be a line for other if you want to add something that we're not thinking about.
Absolutely. And just as some background and introduction, I'm Chris Canter. I am the President and Director of Consulting Services for the Commpliance Group. We're a full-service regulatory consulting firm handling FCC, state, regulatory tax compliance in the United States and various other jurisdictions. And joining me is Tom Forte, Director of Business Development. And Tom, if you want to introduce yourself.
Hi, all. Most of you know me. I'm usually the first line of calls when people come in, and so we're looking forward to these and future ones for you. So thank you very much for attending.
Perfect. So what we're going to cover today, we're basically going to do both a high level and deep dive into the FCC Form 499. So if you've never heard of FCC Form 499, we'll go over kind of the basics, what it is, how it relates to the Federal Universal Service Fund here in the US. And then we're also going to kind of deep dive into some of the mechanics of what gets reported through the FCC Form 499. We will cover the de minimis exemption and then some of the other kind of issues that you should be aware of when you're populating and completing the 499. Again, if there's any questions, we'll certainly take those at the end of the presentation. So put them in the chat as well. So to get started, really just wanted to kind of give an overview of the FCC Form 499. This is really the main data feed for the Federal Universal Service Fund, which is a program adopted by the FCC and administered by the Universal Service Administrative Company, or USAC. So if you hear the term USAC, that's the administrator of the Federal Universal Service Fund. And the Form 499 is really used for two purposes. One, it's the initial registration, both with the FCC and with USAC. So providers who provide telecommunications or interconnected VoIP services in the US have to fill out an initial Form 499 to register with the FCC. And then there's ongoing 499 reports that are filed either quarterly or annually throughout the year. And on those kind of recurring 499 reports, providers are asked to identify their revenue, both from regulated telecommunication services and then certain non-regulated services. In fact, there's a line 418 which asks for the total company revenue. So it's a holistic reporting mechanism for your company's regulated revenue in the United States. So what does the Form 499 do? First, it provides the contribution base for the Universal Service Fund. So the revenue reported on the 499s is then used to calculate contributions to four distinct universal service programs in the US. That's the Connect America Fund, the E-Rate, Rural Healthcare, and the Lifeline Fund. So those funds are then, after they're collected from contributing carriers, are dispersed to those four funds. And again, they go to support universal service obligations in the United States. Another thing to really be aware of also is that revenue data also feeds into the Telecommunications Relay Service Fund, the North American Numbering Plan, and local number portability. So not only is Federal Universal Service calculated through the 499, but these three additional funds are also calculated as well. Also, the FCC regulatory fee is also calculated from it as well. So there are multiple fees calculated based on the revenue reported on the 499. And another one thing to kind of highlight here is that there is a Federal Universal Service Fund contribution factor that's set quarterly. Right now it is, or for Q1, it was 37.6%. And this will come into play when we talk about the de minimis rule. But that factor is almost 38% of your regulated telecommunications revenue. So it is something to take seriously as you evaluate your Federal Universal Service Fund contribution obligations. And so, can you go back, Maxine? I'm actually at the 498. Yeah, perfect. So the FCC, there are two types of reporting forms for the 499s. The first is the annual form, so that's the 499A, and that's required by all regulated telecommunication service providers. That's filed every year in April, and on that, the company is going to list their total telecommunications revenue, which makes up the contribution base for the Federal Universal Service Fund. Again, you also do list additional company revenue on it. It also asks for jurisdictions for local number portability, along with some other additional information about your company. So overall, there are a lot of data points that feed into the 499A, and that's largely because, again, as I was saying earlier, those data points are used to feed different federal funds and then determine the payment obligations for those. There's also the 499Q. So this is a quarterly filing, and this is required for non-de minimis providers. So if you are over the de minimis threshold and what's known as a direct contributor to the Federal Universal Service Fund, you should be filing the FCC Form 499Q, because what the 499Q does is it determines throughout the year what your quarterly contributions are. And if you're a quarterly direct quarterly contributor to the Federal Universal Service Fund, that may allow you to be exempt from payments to underlying carriers for Federal Universal Service Fund. So really the Q is important for setting the stage for direct contributor status. And again, it does allow you to qualify for exemptions to underlying providers as well. These are filed quarterly. And the other thing to identify on it is the Q uses projected revenue. So, so what you do with the Q is you end up filing on projected revenue for the next quarter. So there are very, very important kind of contribution obligations that stem from the 499Q. If you are actually de minimis, then you are not required to file the 499Q. There are requirements within the USAC system to identify yourself as a de minimis carrier within the USAC portal, but the 499Qs are not required for de minimis service providers. Okay, so you go to the next slide. So I think one of the important things to highlight about FCC Form 499 reporting is, the jurisdictional allocation of revenue here. So generally within the US, there's three types of jurisdictions where you're going to report revenue. So you can have interstate revenue, which is between two states, You have international revenue, which is between US states and an international point, and then intrastate revenue, which is revenue from within a state. And these are generally measured on, the endpoints of a call, although there are different allocation methods which we will get to within this presentation. But really what's important to emphasize here with the jurisdictional allocation is that interstate and international revenue are the ones that are going to be subject to Federal Universal Service Fund contribution. Intrastate revenue might be subject to state universal service and other regulatory fees at the state level, but generally it's going to be exempt from the Federal Universal Service Fund contribution base. Now, intrastate revenue may feed into other federal programs like the TRS, the NAMPA, etc. So it is still important to get that accurate on the FCC Form 499s. But for jurisdictional allocation purposes and contribution, really interstate and international revenue is going to be one of the key factors for contribution. The other thing also to identify here is the carrier's carrier revenue. So that's wholesale revenue, and that's revenue from providing telecommunication service to other carriers, can be considered exempt from the contribution base. But this is where you get into exemption certificates and verifying those. And I think that might be a topic for another presentation. But any revenue that you can certify as exempt, and that's if you get a valid exemption certificate, that gets reported in line 300 of the FCC Form 499, and generally that's not considered part of the contribution base. All right, so de minimis status. So what de minimis actually means is that a 499 reporter is exempt from directly contributing to the Federal Universal Service Fund. Now, when I say direct contributor, if you're not a direct contributor, you will likely, or you may be paying Federal Universal Service Fund fees to your underlying providers. So if you're getting bills from your underlying service provider, you may still see Federal Universal Service Fund as listed as a line item on those invoices. So you still have, so de minimis providers still have some Federal Universal Service Fund contribution obligations through their underlying provider, but they're not going to be directly receiving invoices from USAC and paying directly into the fund. Now, where it gets interesting is that the FCC's rule is that annual contribution, so if your annual contribution is $10,000 or $10,000 or more for the entire year, you will be considered a direct contributor to the Federal Universal Service Fund. If it's under that, you qualify for de minimis. Now that's an annual, and again, you have quarterly FCC Form 499Qs, which are filed for direct contributor status. So one of the things that is very, very important is to monitor your contribution obligations throughout the year and make sure that you're not going to exceed the de minimis threshold, because that can create kind of a delta between what you're paying your underlying providers and then what you're paying into the fund. So that's one of the kind of key things to emphasize with any compliance overview or compliance plan for the 499s is to really keep an eye on the de minimis threshold and make sure that you're going to be in line with it at the end of the year, either as a direct contributor or an indirect contributor, and then adjusting your either 499 reporting, your contribution obligations accordingly. It's something it really is something to stress as you get towards the end of the year and you're filing your 499As. Next slide.
Okay.
All right.
So
I'll let Tom take it away.
Take a break, bud. I'll let you rest your voice for a little bit.
Sure.
And hard to believe that, but we're closing every day. We're getting a little bit closer to the end of the year, and so this is one of the points where we tell people they should have really take some chance to look backwards and look forwards. The retrospective part of it is, look at where you're at and you're reporting on your 499 Qs. Have you over-reported, under-reported? What's going on with everything right now? Because you still have one more quarter to try to adjust things going forward. But retrospective in the 499A, reports on 423. So if you're in that, we're talking about de minimis here. And so if you still think you're going to be de minimis, it's still a good time. So let's just look at where you're at. Am I going to be de minimis by the end of the year? As Chris said earlier, if you're 499, if you are a de minimis carrier, you could just check that box that says you're not. But I would still caution people to look at it on a quarterly basis and figure out, am I going to be close or not? And so that you could plan your future with your USF and stuff like that. If the total falls below the threshold, the 39,000, you're still treated as de minimis. But again, know where you're going to be. I have many people call and say, I think I'm going to be over this year. What do I do? And so your retrospective, look backwards. Your prospective, what is the reasonable expectation? What am I projected end user revenue is going to be for that last quarter? Am I going to be over the 499 threshold or not? And if so, what do I do and how do I do it? You have that one last quarter to look at things. You could over forecast, you could under forecast, you could sort of true it up. Maybe you've over forecasted for 3 quarters and you're going to be way in terms of you've paid way too much into it and you might have paid too much into it. Now's the time to look at it, take some time and figure out what I'm going to be doing with this retro. What's it going to look like at the end of the year and try to adjust it in that last quarter. Okay, Maxine, next one, please. So what does the minimum status change and what it doesn't? So it makes you exempt from direct payment of USF contributions to USAC, like we said. It makes you exempt from filing the quarterlies, but again, like I just said, even though you're exempt from it, I would still take the time and go through the exercise to figure out, to make sure that I am still de minimis. And then begin assessable monthly USF on your invoices or projected revenues. What it still requires you to do is you still have to file the annual 499A every year. You have to recertify your de minimis status annually based on your exemption certificates with your underlying carriers. Notice I said carriers if you have more than one. You may still indirectly contribute to USF through an underlying carrier's pass-through charges. Remember, again, that's on the wholesale rate and not the retail rate. So you're always talking about 2 different things. But it's also a time to make sure that you have accurate records so that you can figure out what is interstate, what is intrastate, what is international. Look at your bundles. If you're bundling it, how do I bundle it? How did the bundle work? Look at all your assumptions that were used to start this process to make sure that they still hold true. Prime example, you may have signed up a large call center. And all of a sudden you're getting more interstate traffic than you thought you had. So now's the time to look at that stuff, figure out what's going on. And as I jokingly say to all people when I do that first initial call, they're not used to this. It's like drinking from the fire hose. And now you're into the 3rd or 4th quarter. You're not drinking from the fire hose, but you're still a little confused about what's going to be like when you do your first 499A coming up. And so always this is a good time at the end of the year to plan it, make sure you're ready to go so that when January 1st comes, you can start getting that done and getting it in by April 1. Next slide. And then this is one of the most interesting and time-consuming discussions I have with clients when it comes to the 499As. Because how do you allocate revenue between jurisdictions? Because there's 3 ways it could be done. You can do it by actual, and these are all rules that the FCC and USAC have in their rules. So it's not like we're coming up with something new. This is actually in the rules. You can do it by actual revenues, identifying interstate and international revenues directly from the books and accounts and records. Backward, go forward one. Okay, you're good. Thank you. It must be consistent, so you always use the same throughout the course of the year. And any method that deviates from the safe harbors or traffic study is evaluated case by case basis in audits. So you have actuals, you have traffic studies. Traffic study is basically getting all the traffic, the collective usage of all of your customers and utilizing it as opposed to the safe harbor. So the safe harbor says that if you're a VoIP provider, 64, almost 65% of all your traffic or all your revenues are interstate in nature. Traffic studies may come back and tell you that, but really my customers are consuming interstate at a 25% rate. So you're now going to you now be able to use a 25% allocation, PIU, percentage of interstate usage, on your billing, which will reduce your customers' USF contribution dramatically. Probably much doesn't affect your bottom line, but it makes you more competitive when it comes to the customer market. So again, actuals, traffic study, and safe harbor. Most people use safe harbor, 65% interstate or interstate, 34.1 intrastate. Wireless has a 37 interstate, a 62.9 intrastate. And those safe harbors are in the rules and regulations of the FCC and the USAC 499 instructions. So it behooves you to know what benefits you the most so that you could make sure that your reporting follows it. And not only should your reporting follow it, but your billing should follow it. So if you're going to bill a safe harbor, you report on safe harbor. If you bill a traffic study, you report on traffic study. Don't get into a situation where you report safe harbor and you bill on traffic study because you have an imbalance. You're going to get a lot of questions from the USAC on it, and it'll fall. It could result in an audit somewhere down the road. So those are the three. And make sure you know what you're doing. Now, you also the risk of outsourcing 499 compliance to your underlying carrier. A lot of you will call on an initial discussion and say, well, my carrier says they're going to do that for me. And that's fine, but just know that there is some risk associated with it. First of all, the filing obligation is not billable. That means the reseller's name must be on the 499A. It is under your responsibility. When you sign up for the service, when you sign up to offer a voice, then you have the obligation to register with the FCC for an FRN and register with USAC for your filer ID. The answer, my carrier collects UFS, so I'm covered, is a myth. Paying USF pass-through charges to an underlying carrier does not satisfy your own filing requirements. You are required to, if not file, at least be able to say that you check to make sure you're still de minimis and do that calculation and check that box. If your carrier passes through and your contribution factor is different. Sometimes the carrier passes through the USF at their rate and not your rate. So they have a lower PIU. And all of a sudden you decide you're gonna, but you still report it, and you report it at 64.9 and they're using 20%, and you have an imbalance there. So you have to know what's going on in this whole chain. And whoever does your reporting has to know how it has been billed and how it's been calculated. If you lose visibility into your own threshold, they may report you as part of a bundle, as part of a big package. And so it's hard to know what part of that big package are you. So it's always good to know where you're at, know what your revenues are, know what revenues they're using to allocate to report on your behalf, and so on. As you add more carriers, your carrier relationships change over the years. You have added carriers, lost carriers. All of that goes into this perspective of what is your revenue, because it's really not the carrier's revenue, it's your revenue. And so you should be able to know what your revenue is and be able to report it as needed. And then last, revision deadlines still apply to you. So what that means is you have a 499A that will be due April 1st, 2027. You have until March 31st, 2028 to revise it. Up until that point, you could revise it as often as need be. But after that, you cannot revise it downward. You can revise it upward. They'll be happy to let you pay them more money. So you can revise it upward, but you cannot revise it downward after that 1-year window. Now, if they do a notice of inquiry and find out that you reported wrong, they could order you to revise it downward. But it's the upward thing that you can't do. So just know that you have 1 year to make changes, and to make sure that you keep track of those changes when the time comes. Next slide. Okay, pitfalls and audit findings and things like that. Because what you'll find is anymore, when you file a 499Q, if anything is out of the ordinary, you're going to get a notice of inquiry or a question within a week, if not less than that, because there's just AI, our favorite word, AI, is built into the system. So the common pitfalls: you're missing the 499 filing. You must file that 499A by April 1st. If not, fines and penalties or late fees to apply. Misjudging the revenue base. So you have to know the revenue base that you're looking at here. Is it wholesale? Is it not? If it's wholesale, do I have all the exemption certificates for my carrier to carrier revenue? How do I have I classified my interstate and international correctly? If I'm using Safe Harbor, did I make changes in the middle of the year from Safe Harbor to PIU? If so, how does that report? Did I go over the threshold? All of it matter somewhere in the middle of the year? Did I become non-de minimis? What happens there? How do I do this? So it's always good to know what's going on with your revenue base. And in that instance, if you did become non-de minimis during the middle of the year, you now have a situation where for the first 6 months you paid your underlying carrier USF, and you are now going to take over from July on, and you're going to start reporting it and paying it. Well, at the end of the year, when you go to file your A, you're going to report on your whole year's revenues. And so you still have the first 6 months where you technically didn't collect any USF on it. And so you're going to have to get your money back from the underlying carrier that you paid them, so that when you go to report it at the April 1st deadline, you're not getting double dipped because you paid them and you're going to have to pay on the beginning of the year stuff. So it's just good to know that if you cross that threshold, don't just assume that it's just for the last of the year. You have to take into consideration the whole year. What happens if you over collect? You have to be ready to do it. You may have to get customers' revenues back. You're going to file your A. You're going to get a response back from the USAC that says you've over collected, and you're either going to have to pay into the fund if you've under collected, or over collected. You're going to have to give money back to your customers. So understand that just because the end of the year is done doesn't mean you're done. It means that there may be some truth in balancing it. What are you going to do and how are you going to clean it up? And then late or unsupported revisions, like I said, you have 12 months after that. USAC requires a show of good cause, including for de minimis filers seeking downward revisions. That's a hard pull right there. That's a hard sell to get a downward revision. It's happened, but it takes a lot of work to get it done. Next one. Key takeaways and what to remember. Form 499A is filed by everyone every year, including de minimis providers. 2, de minimis status is based on a $10,000 annual contributions liability, approximated by an end user interstate and international revenue threshold. For 2026, it's $37,175 is your threshold for total interstate and international revenues. Again, that gets adjusted by PIUs and things like that. Item 3, revenue allocations mean traffic studies, VoIP Safe Harbor at 64.9 or wireless at 37.1. Make sure you apply it consistently throughout the process. 4, qualifying excuses a provider from the 499Q and direct US payments if you're de minimis, but not from filing or keeping the potential under pass-throughs. Remember, you do have to file an A at all times. And then review your status every October. Use both last year's actuals and next year's reasonable projections, and figure out a plan and make sure you, as I said earlier, make sure you handle your reporting. Don't let your reporting handle you.
Cool. And one of the things I'll add here, Tom, and this goes to one of the questions that was posted in the chat, is it really is a living process that you do want to make sure you're keeping an eye on your contribution obligations both throughout the year and then at the end of the year. For better or for worse, the contribution factor changes quarterly, and there are variances in it. It can go up 1%, it can go down 1%, and especially if you get to a point where you're either close to the de minimis threshold or your projections are kind of are differ from your actual revenue at certain points. Those are always good touch points to kind of review your contribution obligations and then review where you sit within kind of the 499 ecosystem as well. Because again, that also impacts your payments to your underlying carriers, or if you're a wholesale provider, what your customers are going to be paying or not paying as well. And I think one of the questions was, why the compliance group, does quarterly or asks for quarterly revenue. And I think this presentation is really a highlight of, because we want to keep on top of it and make sure that, you as the communications provider and then us as the compliance provider are aware of where you sit within the direct and indirect compliance or the 499Q filing obligations. So really it is for the benefit of the communications provider to understand what their contribution obligations are both throughout the year, not just when you go and file the 499A. It really eliminates a lot of the surprises.
Right, and that's the other reason is if you do it quarterly, when the A comes around, it's just math. Now you just got to add up what you filed and things like that. So you have a better handle, and you're not recreating the wheel when it comes to the beginning of the year, because there are so many other things happening with the beginning of the year, with financial statements, other reports that are due. So it's very helpful, and like we said, if you're especially for those of you that may be close, it's a chance to let you plan your future.
Exactly. One of the other questions that was posted here was about reporting revenue paid to resellers or paid by a reseller to their underlying carrier. That is not reported. That is not reported on the 499A. USAC is not terribly concerned with what you're paying to your underlying providers. So you really are required just to report your revenue, and that's total revenue. It's not net revenue, both for the contribution base and again your total company revenue on the 499A. One of the things I will highlight though is you also do report how much Federal Universal Service Fund fees you have assessed or collected from your end users. So for the amounts that you collect on line items in your invoices that say Federal Universal Service Fund, there is a line on the 499A in which you report the total Federal Universal Service Fund collected, because under the FCC's rules, the Federal Universal Service Fund collected amount or assessment is considered interstate and international revenue. So it is considered part of the contribution base. So Federal Universal Service Fund is actually assessed on it. There is, if you read the quarterly FCC notice about the fee factor, there is a circularity factor which gets applied. So it's a very small percentage that USAC applies to the contribution base, and that's designed to eliminate the circularity of contribution on contribution, or kind of tax on tax, if you will. So that is factored in, but one of the things that people may not realize is your Federal Universal Service Fund fees are subject to the Federal Universal Service Fund itself.
There was one other question in there about USF again, and line 403 versus 419 and 420, and on your IRS tax returns. Don't know the answer to that question, but it's something we'll look up, and I've never thought, does the line 419 have to match my IRS tax return? Never had that question asked, so it's one of the things that I'll look into.
I mean, I would argue that it should.
Mhm.
I don't want to go too far out on a limb here because there may be certain tax differentials between federal tax reporting and federal universal service fund reporting. I will say they are two distinct regulatory. One's the IRS, one is USAC. But I would imagine that in most cases, total company revenue should be similar on both of those forms. I know there's no specific rule that I'm aware of dictating that, but again, the USAC or the 499 is asking for total company revenue, and that is likely what is to be reported on your IRS return as well.
Okay. Any other questions? Any other comments?
Maxine, did we have more questions? I think we had some questions. Fine. So again, well, really appreciate everybody taking the time to attend. We hope this information was useful to everybody. Again, if you do have specific questions about the Federal Universal Service Fund, 499 reporting, Tom and I are obviously happy to help and happy to talk more about any of the underlying issues here. We will send around the survey after this. So if you do have comments, suggestions, feedback, we will read them. As Tom was saying at the top of the presentation, do put in some suggestions for what topics you want us to cover in the future. I've had a very enjoyable time doing this, so I'm happy to do one again. And really thank everybody for yes, the deck will be available and we will send it around along with the survey and materials after this presentation, along with a recording of the presentation as well. Do you want to add anything?
No, I was just looking at the one. There was a question about, is there a place to report what is paid by a reseller to the underlying VoIP provider? No.
Mm.
No, it's not.
Yeah.
Because it's really based on your revenues. But there is no one line item that says this is what I paid my underlying carrier on this. So
perfect. Well, again, thank you everybody so much, and we look forward to having you back for our next update. Appreciate it.
thank you all. Have a good day.
Thanks.